please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
They're trading higher, taking a cue coming in from Wall Street overnight. The Nikkei, in fact, that's up close to around 1%.
Pricing pressure continues to be there in the market, and we expect this to continue to what you call stay for some more time.
Focusing on pure global plays might be a better idea. I think commodities, for example, metals today could be a good area to focus on. Oil and gas today could be a good area to focus on. Select IT stocks.
There goes the opening bell. And yeah, it's almost a 0.5% gain. The Sensex starts 178 higher.
We continue to maintain that this year the returns will not be so great. If you recall, at the start of the year, we said we're expecting an upside of just about 10% for the Nifty and the Sensex.
MSCI says the restrictions are inconsistent with the practices of any other market in their emerging market index series, and could result in unprecedented disruption of trading.
Network 18 reporters say, reports say that Mr. Nirav Modi has been traced to New York.
Massively off the highs. The high was 10,612, so 100 points off the highs and about 25-30 points off the lows.
And that's been the problem for this market. All rallies being sold into completely decoupled from the global cues, the limited global cues that we have. And today also has been that kind of day. This closing bell, I'm Anuj, with me Surabhi. Hi Surabhi, good afternoon.
Good afternoon, Anuj. I want to sound bright and cheerful, but I don't know how to do that because even today's action, the week, I was just looking at the week-to-date performance of the indices. Even Dow is up 4-5 percentage points. We are flat. And then, the kind of sell-down that we are getting today, once again, mid-caps underperforming. What's the takeaway?
Yeah, I think, we were discussing this last week that can we decouple from the global markets? We have, unfortunately, on the way down. This is serious stuff because 5 days running, we have had positive global cues. Forget about Dow. I don't even want to talk about Dow because, that's a different market altogether. And, you want to compare yourself with your cousins, right? You want to compare yourself with like-to-like comparison is always better. So, MSCI emerging market this week is up 4.5%. MSCI Asia ex Japan is up 5%. And we are flat on the Nifty and we are down 1% on the Bank Nifty.
And this is probably when institutional participation would have been lower for these indices because of the regional holidays in Asia.
Exactly.
Right?
So, the point here is very simple that the market is underperforming and there's a domestic factor which is clearly impacting. In fact, now you wish that, you also had a lunar holiday, right? Because if that was the case, then probably we'll not be trading. But all rallies are being sold into, and that was the risk this morning as well. And sometimes, from the bull's point of view, it's bad to have a gap up because, when a gap up happens, that provides the fodder to the bears to come and short this market. Next week is expiry. Right now, the momentum is clearly with the bears. Let's see how things move on from here. One thing is clear that this whole PSU banking issue and this whole Bank Nifty issue has some more legs to go on the downside, and there's some weakness. And as we discussed 2 days back as well, the market does not like the word fraud. Regardless of whether it's 11,000 crore or whatever amount it is, that's what you don't like. There are a couple of stocks like HDFC Bank that trying to bat for the bulls. A couple of IT stocks like TCS and Infosys trying to bat for the bulls. But you can see it on the screen who's winning right now.
Absolutely. Let's see. Very critical last 1 hour coming up. Here are the headlines this Friday.
Start of trade, Ashwani Gujral and Prakash Kaba now join us with closing strategies. Good afternoon, Ashwani. You have been calling for shorting the market through the day. But do you think it's time to cover now and take home some profit, or are you playing for last hour weakness as well?
See, basically, if you are playing for today, I think since the morning you have enough. But interesting thing is that we have now broken the other day's low when the fraud just came out and we had a 460 point downward slide. So, once a low is made because of some event or news, if that starts to get taken, the message there is that there is more selling on the way and that event did not create a clear low. So my sense is that you can hang around here because now the next support is about 25,050, fairly close by. But finally we'll go through 25,000 and you can forget about global markets, etc. We are charting our own course, and for the moment I won't hesitate to say that maybe the correction has restarted on the downside, and now you have 50-70 points left on the Nifty also to break its range. And given the way mid caps are behaving, I think the odds are extremely high that we break through 10,400 and we go lower. So that way the bias is short, but don't short just at any point. Every day Dow obliges us with a rally, so every day you'll possibly have a gap up. That's the point to get short. So, having said that,
please go ahead, Ashwani.
Yeah, Ashwani, go ahead. Please complete your point.
Individual stocks, LIC Housing is a sell with a stop of 526, target of 500. Adani Enterprise is a sell with a stop of 211, target of 196. And Dabur is a buy with a stop of 338, target of 354. See, earlier we were thinking that maybe, techs will outperform or NBFCs will take on the mantle of banks. Now everything is falling. So there is no discrimination. Autos is falling, iShares is falling, everything is falling. And that, tends to create its own momentum. So anybody who thought the bottom is 10,500 and bought, first dip people generally tend to buy. I think those people are going to suffer in the days to come.
Okay, Ashwani, actually my follow-up question was exactly on that point. Where is this downside momentum most apparent? So if you're thinking of, carrying forward shorts today, where should those shorts be? On PSU banks, on maybe is the Nifty bank the best bet? Or are you looking at other pockets where shorts will perhaps start yielding good money?
See, often people believe that, PSU banks can keep making mistakes and the market will keep forgetting and forgiving. I don't think that's quite happening this time. And, I told you the other day that PNB will lose 1/3 of its value. It's down 25% from there. I think PSU space banks are the weakest, but it's not only PSU banks. IndusInd Bank is down 1.5%. ICICI Bank is down 2%. State Bank is down. So overall, the financial sector, in a sense, seems to be getting derated. So financials where there was great outperformance last year, I think are planning to give back. Possibly Bank Nifty 23,500 could be achieved, and similarly Nifty, a test of the 200-day moving average looks fairly likely, which is closer to 10,000, 10,100.
Okay, all right. We also have Prakash Gaba with us this afternoon. Afternoon, Prakash. What's your reading and what are your strategies for the last hour?
To me, I think basically the Nifty is weak. 10,400 that we have seen and rally from there to 10,618 looks like more of a relief rally, a bounce which needs to be sold into. Kind of a corrective up move that has gone up to say it's coming down. Looks like 10,400 will be breached and maybe we're heading to levels closer to 10,097. It's a matter of time, we'll go there, but yes, all rallies need to be sold into. For the last hour, I feel one stock should be long, one short. ACC, perhaps we can see an up move. Target on the upside is in the vicinity of 1665 to 1680 zones. Stop below 1645 on ACC should be fine. But the stocks that look weak for the last hour is Chennai Petro. That looks weak. I think it's heading to levels closer to 360. Maybe today or maybe on Monday as well. Stop about 375 on Chennai Petro should be fine. It's a good shot here.
Okay, let's do one thing. Let's address our stock 360, and really the stock with hugely volatile moves today has been Fortis Healthcare. Just see the intraday chart of that stock. It's really phenomenal the way this stock has moved today. Started up 5%, then at one point down about 17 or 18%, and then intraday recovery of 10%. Here's Ekta with stock 360.
Thanks, Anuj, for that. But net Fortis is still down. Year to date, if you look at the stock performance, is down 20% year to date. And if you look at it from the highs that it had touched in April of 2017 of 220 rupees, that stock has corrected over 40-odd%. Now, in terms of the timeline of events for Fortis in 2018 has been quite interesting. It's been a dramatic year when it comes to news flow for Fortis. So, for example, Jan 31st, the Delhi High Court upheld Daiichi's 3,500 crore award against the Singh brothers, which they eventually moved to the Supreme Court to appeal to. 8th of Feb, the Singh brothers resigned from the Fortis board. 9th of Feb, there were reports of the company siphoning off around 500 odd crores from Fortis and the auditors not signing Q2 numbers, though the company did clarify on it. 12th Feb, we saw ICRA in fact downgrade Fortis's bank facilities, and 13th Feb, we saw that the board had accepted the Singh brothers' resignation. They also approved buying of RHT Trust for around 465 odd crores, which basically is a holding company for the assets in India, and the company further delayed their board meet for the release of results for Q2 as well as Q3, which now stands on the 28th of Feb. And just yesterday, the Supreme Court allowed the sale of Fortis shares of the pledged, which are pledged with lenders, mainly Axis as well as Yes Bank. So those two, that particular piece of news was in focus. And today, we understood that the Supreme Court has rejected the Singh brothers' plea to challenge the Delhi High Court order upholding the award which was given to Daiichi of around 3,500 odd crores. So basically, a couple of key points which we need to watch out for when it comes to Fortis in terms of news flow going forward is that the lenders can now probably sell their pledged shares in the company. So maybe the kind of volatility that we've seen is on account of that as well. Axis, for example, has 390 crores of pledged shares. Yes Bank has around 1,580 odd crores. And remember that 98% of the promoter holding, which is around 34%, is actually pledged at this point in time. Also, there are reports of a possible deal with Manipal Hospital as well as TPG, something that CNBC TV18 has reported exclusively as well. So maybe there could be some sort of developments on that front, considering that they cannot appeal in India to a higher court at this point in time. The company is still to release their Q2 and Q3 numbers on the 28th of Feb. So that is something that the street will be watching out for very closely, especially when it comes to the auditor reports. And lastly, the Singapore court is expected to hear an appeal on the Singapore ruling of the 3,500 crore when it came to damages awarded to Daiichi from Fortis. That would be a separate case that Harish Salve is in fact fighting for on Fortis's front. But if you're talking about near term, the pledge shares as well as the Q2, Q3 numbers on the 28th of Feb would need to be watched.
Okay, Ekta, thanks a lot for that. By the way, a couple of stocks moving to low point of the day right now. Just pull out the intraday chart of Arvind. That stock is at the low point. IndusInd Bank has moved to low point, which is quite interesting. And HDFC Bank, which through the day was trying to bat for the bulls, is now seeking lower levels. Not quite at the low point on HDFC Bank, but thereabouts. So that's also quite interesting. Deepan Mehta is also with us, member of BSE and NSE. Deepan, good afternoon. Before we discuss, some of the bigger stocks, since we're just covering Fortis, what's your approach on that stock?
Well, I think it's for minority shareholders, it's not great news, and even at these levels, it's better to sell off Fortis, not just because of all the controversy surrounding the stock, but also the fact that it's been a gross underperformer, not been able to create value. Look at some of the other healthcare companies like HCG or even Narayan Healthcare or even Dr. Lal's Path. They all have done far better in recent times than Fortis or Apollo for that matter. So even within the sector, it's not the best pick. And now we have all these controversies. I think it's best to even exit out of this company at these levels, use the proceeds to take advantage of this correction to buy into solid blue chip companies.
Okay, speaking of big companies, I mean, some of the non-index names, the significant names, are also facing selling pressure today. So be it a Titan, be it something like Edelweiss Financial or a United Spirits, a lot of these bigger stocks also pretty much struggling at the lows of the day. Speaking of the lows, the Nifty Bank is very close to that level as well with that 200-point cut. We're just flirting with that 25,200 level. Let's see if the Nifty Bank can maintain above that. Deepan, good afternoon. So, the next basic question, where do you think this leaves us in the market? It's been a rough week. It's been, one troublesome news after the other. Today there was, added talk about this MSCI press release about them threatening to reduce the India weight because of the exchanges issue. What's your sense? I mean, are we anywhere close to the bottom of this current correction, or do you see it continuing?
Well, I think this is the way nature is. When bad news comes, that also comes in floods. And when there is good news, we don't see any bad news around. So well, we have bad news and the markets have corrected, and all the players in the market who are expecting a correction, looking to buy into a dip, this is your moment. And I think that per se, fundamentally or in terms of the economy or the earnings, there are no issues at all. It's just that some of the factors have come because of union budget or sell-off in global market, and now we have this issue with PNB that has caused some amount of panic. But I think this is the best time for investors to load up on good quality stocks. And where the bottom will be is difficult to call, but all that I can say is that if the chart pattern changes from lower top, lower bottom to higher top, higher bottom, then we can conclude that we have a bottom in place and maybe you should buy more aggressively. But these things are easier said than done. Having seen so many such corrections in the last 25-30 years or so, the best strategy over here is to identify the good quality stocks, have your price points ready where you have the comfort level, and buy them gradually over the next few weeks or so. These opportunities do not come very often. We still remain bang in the middle of a multi-year bull market, and such corrections must not be, advantage of such corrections must not be not let go by the investors.
Okay, by the way, the market is now at a fresh intraday low on the Bank Nifty, and I just tell you something, the market is now, I don't know, I mean, it's just take a look at the intraday chart of an ICICI Bank, for example. It was one stock which was holding the market yesterday, the Bank Nifty that is, and there's been a bit of a selling pressure, and if you take a look at that volume action on ICICI Bank, it's quite interesting. Ashwani, thoughts on ICICI? Yesterday it was a top gainer. Today, as we speak, is making a move towards the low point.
See, I've been saying this since the morning that this is not a PNB issue. I think there's clear derating. State Bank is down, to 2.7%. So I think banks will take a hit because of this, and it's not surprising. They had gone up quite a lot. One day there was FDI in banking, next day it was Moody's. So those 1,000-point rallies, they will have to be given back. So 25,050 is the next support, which was the level hit the other day when Nifty hit 10,275. I think that's also a matter of time. If it doesn't happen today, it will happen maybe on Monday. But there's definite tailwind on banks, and all rallies should be shorted on banks.
Yes, I think this large banks, I don't know. So I think the street is sensing something here, that maybe over the weekend or something, could there be some more developments? Because look at the Bank Nifty now. All of a sudden, 300 points gone now on that index, 25,118. In the morning, we spoke about the possibility of the Bank Nifty actually going and testing the 200-day moving average of 24,600. But 25,118 is what we have already right now on the Bank Nifty. So, Ashwani, for the next week, for a positional trader, you reckon that it's still got some distance to go on the way down?
See, 200 is not something which is sacrosanct. Things can go even below 200. But that is a level of support. So if you again get a rally in the US, again Bank Nifty opens up 150 higher, the same trade can be taken, because even the stronger banks are now coming under pressure. So the HDFC Bank alone cannot defend against State Bank, ICICI Bank, Axis Bank, now IndusInd Bank also. So there seems to be a fairly clear tailwind even beyond the PNB issue.
I just want to point out, along with the banks, guess what's keeping them company today? It's also Reliance, because there's some fresh selling now on the big boy. Reliance is still up about 2% for the week. So, Anuj, I don't know, if that trend also starts changing, then there's a big problem for this market, right?
See, again, on these days, everything looks magnified. But obviously, this is a pretty ugly day today, because, you started about 50, 60 points on the upside, and now you're down about 110 points. And, you're not stopping. It's, if nothing, you would expect some shorts to at least take profit, because, a lot of this is, of course, clear shorting as well. So it's not helping. And, obviously next week is expiry, and the momentum right now is with the bulls. So this clearly is a domestic issue. And right now the market is fearing that maybe something more would come out over the next 2 or 3 days. I mean, that looks like, or at least that's a market fear. I mean, it may or may not happen, but you don't want to take a risk right now in this kind of environment. But the sheer underperformance of Indian market really is startling, because this was the week where one thought at least that volatility trade was over. The global market, Dow up 5 days running, back about 25,200. So the global setup was perfect. Crude was down to 64. Other markets were rising. The institutional selling was down, and amidst all of this, you have this big issue coming up, and all of a sudden, everything is looking down right now.
On a lighter note, maybe our market is beginning to discount the US 10-year at 3%. That market has suddenly ignored it because the yield keeps moving higher. But last 4-5 days, US markets have completely moved on from the interest rate issue.
Jokes aside, Surabhi, this is a domestic factor. This, let people not, think for 1 minute that, if tomorrow, you'll have a big rally in the US, then, Indian market will follow suit. Something domestically has gone wrong, and the market is taking cognizance of that. There's one big sector which is going through a bit of a derating because of that, and that's what's happening right now with the banking. I refuse to believe that, stocks like ICICI Bank or State Bank should fall that much because, you have fraud in one bank. So obviously there's this, systemic issue here which the market is dealing with right now. At some point it will be over, but for now, I think the pain is real. Also keep in mind, the market rally was led by banking. So on the way down, obviously these falls will also look quite magnified.
Absolutely. We need to take our first break on Closing Bell. On that note, quick reminder, our Closing Bell money control question of the day is that just like Vijay Mallya, will Nirav Modi also manage to stay beyond the reach? Struggling with a 1% decline on the Nifty and a bigger one, much bigger one on the mid-cap index. That index is down about 300 points, and the Nifty Bank continues to lead the bear charge today. Let's bring in Sandeep Wagle and get some trading ideas going. Good afternoon, Sandeep. It's a good afternoon if you're a bear. If you're a bull, obviously it's not gone as per plan. What are your trades?
Afternoon, Surabhi. I am a bear. I have been a bear from the morning. I am expecting the test of 200-day moving average, and I think that will happen in the next few days. As of now, a sell in Adani Enterprises, stop loss of 211, target of 201. And a sell in a Motherson Sumi, stop loss 333, target 310.
Thanks a lot, Sandeep, for those trading ideas. Jay Bala is also with us, Chief Market Technician at cashthechaos.com. Jay, good afternoon. Good to have you on the show. So, big downtick for Indian market, and this is clearly an isolated instance because the rest of the markets are quite okay. Of course, a couple of them have not traded for last 2 days, so we won't know. But overall, your thoughts on the Indian market action?
See, the markets is caught in a crossfire. The European markets are saying the correction is done, but whereas the US markets are saying there is still fresh lows beyond the February lows it saw. So that's the reason why the markets are caught in a crossfire. Once the decision is made on the global front, whether the European markets are going to drag the markets up or it's going to be the US market that's going to drag the rest of the world with it. So once that resolution is done, I think the market will make up its mind. Right now it's locked in a range between 10,600 and 10,300. Ideally, I would like to see a small drop below 10,300, somewhere close to 10,000, 120 of that sort. If that happens, I think the market will be in a right place for a shake of the weak hands. Once that is done, the medium-term picture for the Indian market is pretty clear. We are heading for record highs past the 11,100 and something and change that we did in January just before the budget. I think that high is likely to get taken out in the medium term, but the short-term chop is something that you got to negotiate, and it's something. It's a welcome change. We've been quite used to markets going up every single day, and the move beyond 10,700 was quite stretched, and it's okay that the markets are falling and causing a lot of fear in the market. We love fear. We love uncertainty.
Okay. So, Jay, I just want to go back to the point that you made. You said the US markets are indicating that maybe there could be fresh lows beyond what we saw earlier this month, whereas Europe is giving a different indication. What do you see for the Dow? I mean, how low can it go then?
It wouldn't be too low below the recent lows it made. Basically, I think we call this in technical parlance as a ABC correction, and this rise from the recent lows is interpreted as a B wave rise, and last pending leg is possible. But whereas the European markets, take the Stock X 50 or the DAX or the FTSE, all are saying the correction that started is done. So, but you got to have this in mind that the European market started its correction slightly earlier. It began somewhere in November. So so probably that's the leading indicator. And for all in the next couple of days, boom, the markets are going to take out the resistance and they headed higher. But at this juncture, it's not at least from my perspective, not sensible to play the index at this point of time. Step aside, and maybe if you find some low risk entry points in calls and puts, maybe you can use that rather than play directly on the index.
Okay, now I think we are going through a phase where the market is seeing selling in some of the recent outperformers as well. Just pull out the intraday chart of Jindal Steel and Power, for example. A stock where you've seen a big rally, of course, play out. And now today you've seen, just look at that, 6% lower now on that stock. Ashwani, on this one at least you think this could be a bit of a buying opportunity, or is this also now on sell side?
See, this gained I think $100 from 170 to 290. So everything will give up those gains. It should at least come back towards 215, 220. So here, metals, the correction has probably just started today. So they have long ways to go. The point is, where are people hiding? They are hiding in metals, in IT, etc. Finally, the next leg, even these outperformers will start giving up ground.
Okay. Jay, then coming back to, your point on, India, you're saying probably not a great idea to trade the index. What are the goalposts? What's the kind of range you see in the near term? A greater chance of breaking it on the downside, this level of 10,300 that you mentioned?
Yeah, that will be the textbook scenario. A fall below that 10,278 the markets made recently, and then the markets trap the medium-term bears, and then the markets go up. That will be the ideal scenario. But markets, there are two patterns that are playing at this point of time, and neither of it is complete. And we are just waiting for the signal that one of that is complete, and we can take a resolution. Could even rise about 10,600. So there is this range. Once we need some resolution to come through. That's the reason why we are a bit uncertain here. And make it a point that that IT is definitely going to record highs past the 13,500 it made. And if some of the dairy stocks that you've been the whole market have been fascinated about, even that's given a beautiful correction. There are pockets like this which are coming to very good support areas, and you can position yourself here.
Okay, that's on IT. What about metals? Jay, we're just discussing that with Ashwani as well. Your thoughts on that?
Yeah, within the metal space, it's not one cap that fits all sizes. Basically, you got to be very picky here. And I love one of the names within the metals and mining that is not within the index. I like Prakash Industries there. It had a fantastic rally from August and went up till January, and now it's pulled back to the recent lows. The recent low is a perfect 50% Fibonacci retracement of the entire move. And and it's bouncing from there and showing all signs, early signs of a recovery from there. I think it's going to take out the record highs past 300. So, and it's presenting a low risk entry point here. I don't think it's going to fall below from the current level of 220. I don't think it's going to fall below 180. So it's a decent entry point, and risk reward is about three or four times what the risk you're trying to take here.
Deepan, your thoughts. We're of course getting fresh news because now all the banks are coming clear with their exposure to PNB. One of them said it was 300 million. Now we have a statement from SBI. It's about 212 million to this, fraud, whatever LOUs they had. The point is that, if this is a good time to be actually loading up, is there any bank stock that you'd want to buy? Even an ICICI Bank is down 9.5% this month. Even something like an HDFC Bank, for that matter, has fallen about 6-7%.
I think this is a great time to buy the retail lenders, HDFC Bank, IndusInd Bank, Yes Bank, DCB, RBL. I think these do not have exposure to corporates or B2B lending. I think great time to get into those businesses as well as some of the retail focused NBFCs as well. This correction I think has resulted in fall in almost all banks and NBFCs, and it's a great opportunity. And I think investors and traders who had bought the PSU banks post the recapitalization news, I think they have to throw in the towel over here. The future for PSU banks appears to be quite cloudy at this point of time, and we've seen the numbers also which have come through for these quarters, which are mostly highly unimpressive. At the same time, these new RBI norms for reclassification are going to require even more provisioning for NPAs. So I think the entire kind of spin which was there on the PSU banks over the past few months is over and done with, and now I think we need to stick to the high performing private sector banks, and this correction which has hit PSU banks more than the private sector banks is a great opportunity to switch out of PSU banks and switch into private sector banks, or overall increase the exposure in your portfolio to the private sector banks.
Well, still down about 270 points on the Sensex and about 87 on the Nifty. The problem, of course, once again today has been the Bank Nifty, down about 1%, and again the mid-cap index down about 1.25%. In fact, this week has been a reversal of last week. Last week the mid-cap started to do well. It looked like at least mid-caps were looking good, but this week has been a crunching blow for mid-caps. 1:5 is what we have on advanced decline. Again, BTSC time. Ashwani and Prakash with us for that. Ashwani, you go first on the index. What are the levels to watch now, and what would be your stock calls?
See, index now any Bank Nifty rally towards say 25, 280, 300, which was the previous support, that would become a sell, and Nifty is hardly 40 points away from the recent lows. So I think if not today, maybe on Monday, that should get taken out. So there isn't much to go with out there. The mid caps have clearly reversed. They will retest recent lows and possibly go lower. The kind of momentum they are now picking up on the downside. So having said that, I think PC Jeweler is doing well. So maybe that could have a good day even on Monday, because chances are it had nothing to do with it. So PC Jeweler is a buy with a stop of 378, target of 400. SBI is a sell with a stop of 276, target of 262, and ICICI Bank is a sell with a stop of 326, target of 312.
All right, thanks Ashwani for those calls. PCs are, by the way, Vakrangi is up another 5% today. Yesterday was also a 5% circuit on it.
Yeah, I think the Bank of Baroda management is on a conference call. I think let's just try to cut across if there's anything interesting that they're saying right now.
So that's really what I would say is on the South Africa issue. As far as the specific Gupta family account is concerned, the loan that we have outstanding is a historical loan that we gave to them when they were in South Africa. They're not of material amounts in any case, and they continue to be serviced till this point of time.
Thank you, sir. Thank you.
Thank you, sir.
Oh, you asked me about the fines, did you?
Yeah, fine.
Yeah, I will tell you. The first fine is of $1 million is because certain transactions which involved cash transaction over $25,000 was not reported. And the problem is in two parts. First, our system recorded them at $25,000, whereas actually it was $24,999.99. And so some of these guys were $25,000, but technically we did not comply with the regulation. And the second situation was there were transactions that were done during the course of the day and they were not aggregated. But of the 8 transactions on which $25,000 was brought in, 7 of these transactions related to dealing with the Indian embassy, and 1 related to an individual account not unconnected to the Gupta family. The second set of issues are around a more generic description around the fact that some of these alerts were not done, or some of the due diligence process must have been tighter. They are not account specific. Certainly they don't relate to the Guptas, but it's kind of a general position. And on that, we are in discussion with the regulators and the appellate authorities to come to a conclusion around that whole thing.
Sure, sir. Thank you for the clarity.
Thank you, sir. The next question comes from Mr. Adarsh from Nomura Capital. Please go ahead.
So, yeah, just wanted to ask a few questions around your margins in the last 2 to 3 quarters. apart from, say, the cost of fund benefit, your yield on advances have not come down. So what's been the churn? Because otherwise system lending rates have been coming off. So what's the churn there, and what should one expect in terms of margins going forward?
Ours is slightly different. We continue to have the similar challenges as anybody else would have in the margin business, and we are not isolated from it. But what we are seeing is a large growth of assets, and therefore a shift of assets from the treasury portfolio to the consumer portfolio. And that is what is giving it a pickup on the lending side. On the deposit side, really, it's a mix in the cost of fund with a continuous improvement in the CASA ratio. So it's plain mathematics around substitution of an yield of treasury asset with consumer assets, and then the spread enhancement coming thereon.
And next year you could have some upsides coming from lower interest reversal. What was the amount, and does that add up? Because I am right now under the obligation not to talk too much about future. So I regret that. I think at some point of time during the course of this year or this financial year or the next financial year, we are actively considering the QIP, and therefore any kind of forecast we made have to become a part of the offering document, and therefore I've been advised by my legal counsel to be very, very careful about it. But let me kind of answer the question in a slightly different way. The consumer business is about distribution, it's about products, and it's about ticket sizes, and it is about efficiency of the distribution. So it's distribution into productivity, into ticket size that really determines the growth of the business. We are increasing the investments in distribution. We are focusing on a broader range of customers, so we kind of straddle different segments. And if I take that view forward, we should continue to see some good balance sheet growth. And so on the corporate side, I think we are reasonably well positioned. For a variety of reasons, we see that we have a good opportunity to grow the corporate side, more cross-sell, and also if I were to take programs such as sales finance, they're getting me entry. It is getting us an entry into a lot of companies which we hitherto did not have a relationship with. And so we are hoping to do more new customer acquisition. We're hoping to get a better market share. And we are also expecting our international business to throw in the weight in that today we are able to offer to some customers facilities in as many as 4 to 5 currencies out of a single limit, which is what a kind of a mini international bank like us or a regional bank like us can offer as a significant competitive advantage to other players. So those are the two things I would like to say. Invest in distribution, invest in processes, keep an outward focus, meet more clients on the corporate side, have better distribution on the retail side, then growth must happen. If growth happens and you take a view, which you are entitled to take, or that the overall NPS story will eventually play itself out, then we should see better times ahead. But as far as the specifics are concerned, I don't want to get drawn into them at this point of time.
That was Bank of Baroda. Of course, you're discussing other issues, the fact that they closed down the South African arm. There was that fine as well, of course, of about 5 crores on Bank of Baroda. And as Mr. Jayakumar was saying, because it was because of that technicality, $25,000 transaction had to be reported, and it was done in 24,999.99. I mean, it's quite interesting. But anyway, we were discussing BTST call. Prakash, your calls were left, I think.
2 shots, Anuj. Asian Adani Enterprises looks weak. We can see a slide to around 198 zones, stop about 214. Bank of India looks weak. It's broken down structure. Can see a slide to around 120 zones, stop about 132.
Okay. Jeb, discussing some stocks. You have a couple of other trading ideas as well, both in terms of positional trades and in terms of short-term trades?
Yeah, now that the banking sector is in some sort of a mess, I think the indirect beneficiary would be NBFC. And if you look at something like a Bajaj Finance, it had a stellar run in 2017, but it has been underperforming since September. But if you look at the move from September to the recent lows, it's been a very choppy, overlapping move. So this is a classic correction under the Elliott wave model, and the pattern is very harmonic in nature. And looking at the lows and the bounce from the recent lows, I think the correction is done for the stock. I think it's going to get the benefits of all the negatives that's there in the banking sector and take out the record highs and go past 2200. This is a position call. I don't think it's going to happen over the next 2 to 3 weeks, but probably something that's going to play out in the region of 8 to 12 weeks, say something like that. Not in the short term, say slightly medium term. And even for the shorter term, Idea is looking very bad on the charts. I think from a medium term perspective, I think Idea is going to drop below 65. But if you are going to play it for the next day, I think it can be an STBD call, and you can place a stop above 84.25. And from the current levels, I think it will at least drop to somewhere close to 78. So I think it's since you're playing on the trend of the medium term, I think it's a very sensible short for Monday.
Okay, all right, Jay. Thanks so much for joining us and giving us some of those ideas and, of course, your opinion on the markets as well. Thanks for joining in. On that note, it's a good time to figure out how dealers have dealt with today's trading session. It's not been a very volatile one. It's pretty much been a one-way ride down. Nimesh is here with the details. Good afternoon, Nimesh. What are you picking up? What's the word out there?
Hi, Surbhi. So, despite the fact that the volumes are on the lower side because many of the Asian markets are short, we're seeing sharp knocks, knockoffs both in the large caps as well in the mid cap and small cap. And that explains that maybe the sense is that some of the smarter investors, the treasury investors, are looking to sell into this rally. Only that can explain this kind of fall in the large caps and mid caps. So that's something that I'm picking up, that at least the smarter investors seem to be on the sidelines. The general sense is that maybe the down leg is not yet over, and probably there is more pain left in the mid cap and small cap. So maybe that is the reason why even the DIs are not very aggressive buyers. In fact, I met some large investors at the conference yesterday, and the general sense I had picked up even from the domestic investors was that they're waiting for this correction to over before they buy fresh into the mid caps or for that matter in the large caps as well. Of course, the banks are under pressure because of this whole PNB issue. But generally, the sense is if the Nifty has to fall further from down, it will be the bank index which will drag the Nifty down. So that's where the bigger negative concern is at this point in time. From a technical point of view, I guess everybody is watching out for that level of 10,300 on the downside very closely. If that gets taken out, the sense I'm getting is maybe there could be a sharper fall, and there could be some margin calls as well that could trigger in the mid cap and small cap. So net, a very cautious mood in the dealing rooms, despite that the volumes are on the lower side. It looks like at least the smarter investors and treasury guys are looking to sell into this rally and not buy into this rally. So it's really a word of technical levels to watch out now. On the upside though, 10,700 is the level to watch. If that gets taken out, maybe you'll see a big rally up on the upside. But for the time being, it looks like there is more leg on the downside, and there are bigger worries to face if there are margin calls in mid cap and small cap.
Okay, all right, Nimesh. Thanks very much for that. Yeah, 10,700 seems a little distant at this point in time. But Anuj, having said that, I mean, the market has tried to sort of find its feet, right? I mean, the Nifty Bank looked like it was completely collapsing. Mid-cap index actually has rebounded from the day's lows, just that little bit. What's the reading now? I mean, what's the takeaway?
My only sort of worry now is, and we've been talking about this, Surabhi, this rally, we haven't seen any correction, and this rally was driven purely by retail flows, by the domestic liquidity. This is the first genuine correction of this market, and first 10% correction in the mid-cap market. And if this were to accentuate, and the signs are that it will, at least for the near term, that I think would be a bit of a test of the market's recent resilience, or the funds that we've been talking about. I think that will get tested. But as of now, there's reason to believe that this is a strong correction that is happening right now, and one which is going to make market healthy. By the way, there's some buying as well in individual names. And look at Fortis's intraday chart. Look at PNB's intraday chart. The one that has actually led the decline. There also there's some bit of buying intraday. I think if you pull out the intraday chart of a State Bank of India as well, or a couple of other banks.
Maybe it's the point you were just making earlier, Anuj, that the shorts would say, okay, I've made enough money and we're getting into the weekend. US markets are very strong, so maybe take some of it home.
Yeah, for PNB it clearly is the case, because you've shorted the hell out of that stock, from what, 140 now down to where you are, the low was around 120, 125. You want to take some of that money home and, maybe enjoy with that money. But let me get Ashwani's thoughts on this intraday move that we're seeing on PNB right now. Ashwani, quite a bit of recovery there.
Well, it's all nice to be enthusiastic going into the weekend. I think we have missed out that the CNX IT index was up 220 points. It is now down minus 40. So now IT is also participating. Obviously, something's fallen 26%. It will come back 4-5%. That's part of the game. In fact, this sort of pullback should get again sold into, because the trend is so strong that 4 or 5% pullback will encourage people who haven't been able to sell to come back and sell. But the important thing is that now there are no stocks left which are holding on the market, and even the IT space is now joining in. So, downtrends, this is a bear market on PSU banks. So let's not even call it a correction or downtrend. And bear market lows are not made very easily.
Interesting stock moves in the mid-cap arena as well. Take a look at PI Industries. Talk about specialty chemicals. Someone's suddenly getting in over there. 4% up move on the stock, and much of that has happened in the last 5-10 minutes of trade. That's PI Industries. We'll just get it up for you on the screen. Deepan, what is the sense now? I mean, you did mention banks and the select ones that you will look out for. What else is on your shopping list? Any specific earning, for instance, that stood out in Q3? Any individual stock idea?
Yeah, I think, we missed out on stocks like, say, Titan Industries or Jubilant Foodwork, which bang in the middle of the consumer-oriented investment theme. And in corrections like these are times that one could get into these kind of stocks. There's aviation, there's also Delta Corp, which came with a very great set of numbers, again in the middle of this consumption theme. So that's the kind of, apart from banks and NBFCs, the domestic consumption theme is another theme which we are actively pursuing. And over there, high quality stocks with differentiated business models, maybe a few concept stocks. You need to get into those companies at corrections like this. So that should be the investor strategy. I think try and improve the quality of the portfolio, get out of the non-performers wherever there's a cloud where visibility is not clear, corporate governance issues are there, possibility of dilution of equity. I think those companies one should exit and use those proceeds to get into solid blue chip companies, which have delivered in the past a good track record. And I think once this correction is over, those blue chip companies, the past performers, will be first off the block in terms of U-turn and delivering positive returns.
All right, Deepan, we let you go on that note. Thanks a lot for your time today. Have a good weekend.